Welcome to All Things Financial. I'm Trey Peterson.
Yelisey Coots.
And this is the podcast where we help you understand your money, learn about money so that you can maximize your life. Before we jump in, I'm excited about today's topic. Today, what we're talking about is you've created extra cash flow. Maybe your income has grown. It's at a new level. Now what?
Yeah.
We hear this a lot. I get a lot of Facebook messages, Instagram messages of people going, hey, for a long time, I was trying to pay off my school loans or I was always stretching. Now I've got a bunch of extra cash.
Yeah.
I'm kind of past the Dave Ramsey. I've done those things. What's next?
Yeah. And it doesn't surprise me too, because think about like in the building stages when you're barely above water, when your priorities are just like they're consuming you, everything you have going on. It's difficult to think about what to do when the day eventually comes. When you do have some disposable income, some assets to invest. And I think that that's why sometimes people don't have an answer that's readily available to them.
I was just telling Steph recently, I said, how nice would it have been if we would have had more disposable income before kids?
You would have spent it all.
I would have enjoyed spending it all.
Yeah.
No, not that we didn't have any. We definitely had some. But I think one of the greatest things is when, you're in a home that feels like a home to you. You're in a community that you want to be in. You're driving a car that maybe is a car that you've wanted for a while.
Yeah.
And you still are contributing to a retirement account, but you find that there's still more money than at the end of the month. And so one of the things that we want to talk about today is if your cash flow is good, the first thing you always worry about is how do I make enough? I'm sick of being broke. And then you get enough. And then when you start making money, you go, how do I make sure that I keep it? And or more importantly, how do I make sure that I multiply the money that's coming in? And so today we're going to talk about how do you save and more importantly, multiply the discretionary income.
Yeah. And I think that the first, you probably would agree with me. I think that the best way to invest those dollars is probably to make an investment into yourself first. Mm-hmm. And we've talked about that on previous podcasts. And I think that the other thing that I've kind of noticed is, a lot of what you do when you invest in yourself, like I think about like the relationships that you have with people at work. Like if you're short-tempered with the people at work, like if you get mad because, I don't know, somebody took your muffin out of the fridge or maybe like, or maybe there's like a meeting that happens every week and you're like, hey, this could have been done in an email and you're just not great to be around. When you work on those things, probably like when you invest in yourself in that way, you end up having a return on your investment in other areas in your life, not just related to work. At least I think so. So I think that just by working on yourself, just in general, whether it's in the financial capacity at work in this environment, I think that ends up going into other areas.
How much money did it cost you to invest in yourself to quit stealing people's muffins at work?
Man, I don't know. You see a good muffin in the fridge, and it's like, man, who does that even belong to? It's a community fridge.
Yeah. No, I mean, I agree with you. I think I get the question all the time. What's the best thing to invest in? And I think there's two different mindsets. There's a mindset of kind of what I would call like a genie mentality where, people start earning some money and they want to take 10, 20 or 50,000 and they want to turn it into $1 million. And then I think there's like kind of like the farmer mentality where it's like, hey, here are some things you can invest in that if you choose the right investments or if you do the right things, that over time you can create stability and then eventually wealth. Yeah. And so, for me, number one, I tell people all the time is they expect me to say the first thing you should invest in is the stock market, which we're going to get to. But to you and I, one of the things I think that we do agree on is that investing in your skill set, making yourself more valuable. One of the things that people don't realize is really the most powerful thing that you and I have is our income. And that's why one of the mistakes we see a lot of people make is if they get a jumbo mortgage or they get 2 brand new cars and they've tied up their discretionary income and now they have no fun money or more importantly, no money to make money with, that's really where they run into issues. And so what's interesting is I've found, you and I were in our now late 30s. We went from mid 30s to late 30s.
I'm just barely past that.
How do you feel about that?
36, man. I don't know.
Yeah.
I feel good.
So, I'm 37. Let me tell you about your future. So I think one of the things that happens though is that, if you end up staying planted in a career and you get better at what you do, you end up having discretionary income. And one of the things that I've found is investing in the stock market is for stability. And I hope that when I retire, I've got several $1 million that's there to pull from if and when I need it. However, the number one thing that I've invested in has been increasing my skill set that's made me more valuable to serve more people at a higher level, which is therefore increased my income.
Yeah.
And so practically, whether if you're in the trades and that's going and getting another skill set and certification that qualifies you for a higher hourly wage, or as a financial advisor, you're getting additional certifications or you're somehow expanding your knowledge that actually makes you more valuable. I actually think that's the number one thing someone can do. And even before significantly investing in a 401k outside of, the free match, I would say invest in yourself. Find something, personal. I'm big in the personal development world. You know that I love that circle. But I would say also, like, what's a certificate or a degree that's going to help you in what you do for work? And so number one for me would be invest in yourself, certificates, courses, mentorship, and then not just networking. I think a lot of networking is fake, but getting in a room of people that are where you want to be and not showing up to get something or take something, but showing up to give something. And then what ends up happening over time is opportunities open up for you.
Yeah. And, our mentor, Keith Kraft, he has a quote that I happen to really like. It's when you choose to get better, everything around you gets better. So whenever you elevate those things in your own life, and I think that the answer can kind of vary a little bit, like for a business owner versus somebody who has maybe a career that's, maybe not as broad. I think business owners kind of tend to have their hand in everything. And I feel like, part of the business model is if you want to grow and improve, you end up pursuing those things, I think, a little more naturally whenever you have the ability to. But sometimes, like if somebody's like a nurse or someone has a career like that, sometimes you're at the limits of what those certifications can do for you. And I think that we run into people that feel like, hey, there's more that they can gain. There's more that they can do in terms of a career. And sometimes they have a side hustle or something else that they end up developing, or they develop a skill set totally outside of what they do for work. And that also ends up being quite lucrative for them at some point.
Yeah, I would say one of the biggest, I would say, pieces of misinformation that I hear from entrepreneurs and people that are entrepreneurs is...
Did you say wantrepreneurs?
Yeah, people that want to be an entrepreneur.
I get it. I just haven't heard that. I like that.
Yeah, I think there's a lot of them. And there's nothing wrong with it as long as you're, developing skill sets and you're doing something instead of just dreaming. But one of the main things that I see is people that invest in things that are not like genie mentality things, but like I said, they're things that actually move the needle, right? So for us, we talk about like business owners. So you and I have a business, and the best investments that we've probably made, I know for me, I would say the best one I've put money into, I think you would agree, is the business. And we have areas that have worked and we've had areas that we lost a ton of money. But one of the things we found is that the things that have worked is that we've made more money by putting that money into the things that work and just doing more of it. So sometimes I think a lot of money can be made on just doing more of the boring things that you tend to want to get away from.
Yeah. And I think that like that return on investment, that's varied over time, right? There have been times when like, hey, like investing more money in our business is not the best investment today. But actually it is, right? Because even though the return isn't maybe there in that specific calendar year, what we're doing is we're creating a process that facilitates a return for a very long period of time. We're creating a pathway that allows us to continue earning. And it just that overall growth and development of our business that I think is going to, potentially be something that we can even hand down to our children, which is very different from something that, whenever you invest in the stock market, giveth and the stock market taketh away, if you will. Whereas in this case, like it creates something that, but I really just think it's almost the foundational blocks that you can have in your life where you can actually have something meaningful over time.
Yeah. So number one, invest in yourself, your skill set. This isn't part of our script, but I'll just mention this. I think there's a big lie that in order to be successful, you have to be an entrepreneur, you have to own the business. And man, one of the things I've found is that there are intrapreneurs and entrepreneurs. So everybody knows about entrepreneurs, but intrapreneurs, which are people that can expand a business from, kind of the inside, team member and employee. And I think one of the things I've seen people that are wantrepreneurs and they go make less money because they want to be the main person instead of making more money being on a team of partners like you and I.
Yeah.
And so one of the things I would say is, don't get set up that if you don't own a business that you can't invest in yourself. Develop skill sets that make you more valuable to your team so that you get so good that it's undeniable that the people that you work for are worried that they're not paying you enough because you're adding so much value.
Yeah.
And that's where you can start the conversations of, hey, here's some areas I'm adding value that are beyond what you expected of me. Can we have a conversation of if there's room for growth here? And if there isn't, then look somewhere else. But I think one of the things a lot of people limit themselves to is if I don't have a business, I can't invest in my business. You are the business. You're the CEO of your life. And even if you don't own one, by investing in yourself, you're investing in your business.
Out of curiosity, how many books a year do you read?
I actually used to read more. So I'll explain really quickly. So I used to read probably 20 to 25 books a year. And
mostly audiobooks or
No. Like I would say those were books that I like read. And I would say over the last maybe like 5 or 6 years, I've reduced it to like 8 or 10 books a year. But now what I do is I pick books. There's a good quote I heard, and I wish I knew who said it, but they said, reading books won't change your life, but reading books that answer the questions you're asking will. And so now what I do is instead of just randomly reading books, I look at like, what are the things I'm looking for answers in? And I'll pick up a book in that area. And then instead of just like reading it and now I'm done, like I'll read through it the first time. The second time I'll like highlight it. And then I'll go back just to the things that I highlighted. So instead of doing, whatever it is, 18 to 25 books, 20 to 25 books, I'll do 6 to 8 books or 8 to 10 books, and I'll just try to study them and just implement some things.
Yeah. So rather than just like scanning through it and getting the book out of the way, you're really spending a little bit more time, a little bit more intentional on that.
Yeah. And I just think like if I can take, my thing is like if I can take one thing away from every book and actually implement it, like that's more successful.
And I was going to say the same thing, like reading a ton of books isn't necessarily going to change your life. But one thing that I think you and I, especially you've met so many successful people. One thing that many of them probably have in common is many of them are avid readers and they read. And that's actually, one of the ways that I would say developing yourself, finding, especially if you're looking for a certification or a skill set you don't have, there's probably books on that topic or things that can help get you there.
Yeah.
And just out of curiosity, I actually looked up like how many books do average Americans read?
And I don't know if it's still true. I know that.
So there's no like recent stuff. The latest poll that I saw was Gallup. They did something in 2021. So I don't know what this year's average reading is.
So I read something, it was about 10 years ago.
Okay.
And it said that only 2% of the population has a library card. And it said something like,
well, maybe that's 90 back when library cards coincided with reading. I mean, I don't have a library card.
Yeah, but it says 90% of people never read a book after high school. Or college, whatever the last school was. What is the stat that you have?
Okay, so it's a little misleading. So on average, you're going to be shocked. It's 12.6 books a year. The average American reads.
Yeah, but
if you look at the median, so like obviously there's going to be those super high readers who read 1,000 books a year or whatever. If you exclude all those people, and obviously those who don't read at all, but the median is 4 books a year.
That's way more than I'd expect.
That's still way more than I thought.
Is that just like the average of people that have a master's degree or above?
So like when you look at, but like when you look at like, some of how they come up with the numbers, obviously like if I'm taking a poll and I'm supposed to say, hey, based on memory, how many books do you read on average? Well, I think I'm going to over-report and overstate how many books I probably read. So there could be a little bit of that. I mean, I don't know, but that's still way more than I thought.
Here's what I would say. I've never met somebody who is financially successful that wasn't a reader.
Exactly. And that's all I'm getting at.
And I'm not exaggerating.
Like you're talking
I've never
about
met
like
someone.
Simple, basic, practical things you can do. Like,
Yeah.
are you reading? Are you looking to develop yourself in that area? Have you found books that can probably help get you on track?
I love it. Okay, next, 401ks, IRAs, and Roth. So this is kind of our bread and butter, right? This is what we do every day is help people invest in whether it's a retirement account, a Roth account, or a brokerage account. In my opinion, we've known some people. We had a client that I met with last week. We were going over it together, but they deposited in 2005 $3,419 into Apple stock, and they've been drawing $100,000 a year out the last 3 or 4 years, and they still have just under $600,000.
Yeah,
they put $3,419 and never a penny more. Obviously, we have hundreds of clients. That's the only one I've seen with a story like that. We've had some close.
Yeah.
But most people, you're not going to get rich investing in the market. You're going to create stability over time. Yeah. Even if you're, in the S&P, all stock, aggressive over time, depending on the article you're reading, the S&P averages 10 to 12% a year, right?
Yeah, maybe a little less than that, but yeah. Yeah, and I would say that like if you are in it to try to get rich, I mean that you're just as likely to go broke in that scenario.
Yeah.
Because one of the things that like the couple you're talking about that they mentioned, it wasn't just that they left it there over time. Like at any moment when something, when a stock like that is gaining momentum, like the question is, do I pull out now? Like, is this only temporary? And they just decided, we're just going to leave it here and see what happens. Whereas like along the way, lots of people probably sold the stock or maybe tried to repurchase it later. So that's why the stories shift. But for them, they just simply didn't touch it since 2005.
Yeah. So invest in yourself, invest in your business, invest in the market. And then I actually love the next one, number 4, as far as the asset, real estate, invest in real estate. One of the things that I would say that you and I agree on this is that there's kind of the Dave Ramsey, which I actually love a lot of Dave Ramsey's things. Yeah. I hear people say all the time, Trey, do you have a recommendation that's different than Dave Ramsey? And I'm like, do Dave Ramsey until you have discretionary income, and then we can talk about Robert Kiyosaki. They're kind of, different ditches. But one of the things I love about real estate is it's one of the ways to create more tax-free income. It is a way to invest some funds that if you do it well over time, you can get rich. But what I tell people is, real estate is not like the stock market where you have an advisor or you do it on your own and you're throwing money into an account you've done some research on. You're actually developing a skill when it comes to real estate, right? Whether you're the general contractor or you've got the hammer in your hand and you're actually doing it, or you're actually working with tenants, investing in real estate is significant for building wealth over time, specifically because we work with people in and nearing retirement. And the name of the game in retirement isn't to have as much money in a 401k as you can. It's to have great income, because income is what drives how you live.
Yeah.
And so, but out of curiosity, so when we graduated from Oral Roberts University, you got a job and you were collecting rent from somebody that had multifamily housing. Yeah. And a lot of people think, man, I'd love to own a complex that's got 20 or 25 or 40 doors where I'm collecting checks from renters. But why don't you share with everyone your experience?
I mean,
is it just an easy liquid investment?
It's not. And well, I think that's the challenge too for a lot of retirees when it comes to real estate. Many of our clients, when they get closer to those retirement years, they're looking to offload some of those properties. And sometimes, we've even had many clients that have held real estate investments within a self-directed IRA, which presents its own challenges because you still have to make an RMD, you still have to satisfy your required minimum distributions, and now your money's tied up in real estate. So how are you going to extract those dollars out to satisfy that RMD?
Yeah.
But no, it's not like, there's a million different ways to do real estate, but if you're actually thinking you're going to be the guy who's doing all the management, all the maintenance, collecting all the rent, and on top of that, like having the ability to find the right location, to do all, and to figure out your financing, to figure out are you flipping this property? Is this a long or a short-term rental? All those things, and you're doing everything. I feel like that's great for somebody who does that full time. Probably not necessarily as easy as it sounds for somebody who has a career doing something else and looking to simply invest into real estate. Now, there's a lot of different ways you can do that too. You can hire a management company. We have many of our clients who've done that, depending on the type of property you have and whether or not it's a short or a long-term rental. Like, you're carving out a significant amount potentially that's going to that management company for the work that they're doing.
Yeah.
So
I would say one of the ways, as far as real estate goes, one of the easy ways to make money, and I've done some, I haven't done a significant amount, but is in buying a home that needs remodeling, that's in the right location. In 2019, Steph and I bought a home that I wasn't in love with, but it was close to family and it had land, and we ended up renovating it. And the story, but we lived there for, you have to live there 2 years in a day. And I think we lived there 2 years and 3 days. But we invested $140,000 of renovations, and our return on that was $283,000.
Yeah.
There's some luck, like we couldn't just do that every 2 years. But I do think that one of the ways that families can get ahead is by buying homes that have potential upside, doing the work themselves, or I didn't do it myself, I GC'd it, but then flipping that home. Because if you think about it, if you could do that even every 3 to 5 years, and you could make a couple $100,000 per house and you get into bigger deals, before you know it, you'll have $1 million house that's paid for versus just paying a mortgage and investing in the market.
Yeah.
So I do think that's a great additional way for people to create wealth with not a lot of risk, because they're living in the home. And as long as you live there at least 2 years in a day, you don't have to pay taxes on any of those gains, as long as it's under $500,000 for a couple.
Yeah. I don't know to what extent most people can do that, right? Making several $100,000 per property. Obviously, it depends on how much money you have to work with, the initial cost of the property. Right? Some folks just aren't in that, in that space where they're buying homes that can actually afford that type of return. But yeah, I mean, obviously it's when it works, it works. But we've also heard stories where it doesn't.
Yeah, but probably just like investing. I'm just saying, I feel like even if you learn on a couple, if you get better and pick up a skill set on your own home, it is a great additional thing to do, especially because of, if you live there at least 2 years, you have the exclusion of $250,000 per person.
Right.
I see you're excited about that. So let's move on.
I guess, when you first asked me my experience with real estate, like I didn't really share any stories, but here's one that, not that it put me off to real estate, but the properties that I managed were in like the worst part of town. Like maybe there was
Section 8.
Yes, almost everybody was Section 8. We had some students on the properties too. But gosh, like I was dealing with meth labs, people who one meth lab. We had a shooting on our front porch. We had, just all kinds of things that weren't fun to deal with. On the meth lab actually, so whenever there is a meth lab, whenever it's determined that there is a meth lab, you actually have to pay a specific company to come in and clean it. You can't just decide, hey, I'm going to show up here and clean this up. And it's very expensive to do. Well, the person who owned the property, who I was helping to manage, decided that we were going to clean it up ourselves.
Wow.
So we show up at the property. I have a bunch of Clorox. Like we have a dumpster out there. We're throwing away, baby pictures, birth certificate, just everything. We're tossing all this crap into the dumpster, assuming that the person who lived there is in jail, right? Just like we'd expect. And we're cleaning up the property. Where in fact, we invited some of the neighbors. If you see something you like, you can take it. And in the middle of this whole thing, the person who was supposed to be in jail shows up. And they're watching us destroy and throw away every item that they owned. So you can imagine that was not a very enjoyable experience. Thankfully, I'm still alive today. But, and not every real estate experience is that. But, that's probably on the extreme side of what you don't want to experience. And I don't think what many of our listeners are looking to make that type of investment.
Yeah. So, all right. So invest in yourself. If you own a business, invest in your business. Invest in the market, 401ks, IRA, Roth, brokerage accounts, invest in real estate. And then
I think that we can probably say a little bit more on investing in the 401ks, right?
Yeah, let's do that.
That is what we do here. So I don't want to gloss over that. And in a very brief way, if I were to summarize, why would somebody invest in a 401k? Well, number one, it allows you to invest in the future. Just like you said, that's the steady path. That's what you want to do. But also it lowers your taxable income in the year that you do it, as long as you're investing in a pre-tax account like an IRA or a 401k. Many of our clients, that's how they've built the wealth that they have. We work with a lot of folks that's their primary source of wealth, is because they've made those steady and periodic contributions to their employer-sponsored plan. Another great thing, typically employers will match a portion of your contribution. So there's some free money that, if you want to call it that, in that deferred compensation or 401k plan. On top of that, Roth IRAs, you pay the taxes now, never to pay the taxes again, assuming you take qualified distributions and you meet all the qualifications there. But that's a significant way that folks invest, and not necessarily into individual stocks, but we're typically looking at mutual funds, ETFs, and bond funds, things of that.
How does somebody know if they're hiring a good financial advisor or an average one?
It's difficult to say. The tendency is you want to judge them based on the performance, right? But performance only tells part of the story. I would say that looking at some of the additional services and assets or things that they provide, like for us, whenever somebody comes in, like we often say retirement is way more than simply a pie chart. We want to know like, hey, how does everything work together? We're coordinating your Social Security, your Medicare, your life insurance, your long-term care planning, your estate planning. We're looking at all these things together and we're looking to see, hey, are you ready to retire? Do you have all these pieces in place? We're looking at what your resources, what you've managed to save. We're taking it as seriously as we would our own resources. We're treating you the way we would our parents. Like we're looking at everything. And I would say that it's much more than just simply looking at performance and assessing, how the S&P 500 is done and just treating everything, based on that, and I think that's kind of the tendency when you work with people that are younger and that are just really just starting to build. But on the other end of it, on the retirement piece, when we're looking to put together a distribution plan, I think that's really where you can kind of tell the difference between a good financial advisor versus somebody who's really, really great.
Anything else on 401ks, IRAs? Why don't you explain for everyone what a pre-tax account is, a traditional IRA, a Roth IRA, and a brokerage account? Because there's people listening that are like, hey, I'm a little embarrassed to ask. Yeah. I had a couple, one of the families that we serve, they're in their late 60s. And he sent his stepdaughter over today to meet with us. And her husband was like, hey, I'm a little embarrassed to ask, what is this account? What is that account? And I was like, man, don't be embarrassed. We meet people every week that don't know. So explain that for people.
Yeah. Well, as I kind of briefly mentioned, but the 401k is maybe the most popular plan that an employer is offering for their employees, right? There's different types of plans out there, but just the most basic one is a 401k. And what that allows you to do, rather than taking your income or your salary home, rather than taking it as a paycheck and spending it on whatever, your normal monthly expenses are, instead you're deferring that compensation. And they're called deferred compensation plans for a reason. There's a variety of deferred compensation plans. But you're deferring that compensation, you're putting it into a 401k instead. And there are limits. You can only defer so much of your compensation. If you've reached the age of 50, then there's a specific catch-up provision that's within the tax code. But you can defer that compensation, and anything you put into that plan in a specific calendar year, you get to avoid paying taxes on that income. And then your employer will match up to a certain percentage of that contribution for you. So that account, you can't touch it until age 59 and a half. It's designated for retirement. So this is, you're looking at this and you're saying, hey, not only am I deferring my compensation, I don't even have access to it until I'm 59 and a half. This is specifically, it's a provision carved out in the tax code to help me plan for retirement. The government doesn't want to help subsidize me in retirement. So instead they're encouraging me and they're giving me an incentive to do it myself.
Yeah.
So that's why you would do the 401k. So eventually in retirement, when you do take that money out, when you do add to your taxable income to your Social Security by taking distributions, you are introducing taxable income. It's your compensation. You just deferred it until at least 59 and a half. So that's the 401k. And then as far as the Roth IRA, it's a little bit different. As I mentioned, you pay the taxes ahead of time, never to pay taxes again. So the growth is tax-free, assuming you meet all the requirements.
Credit. It's a little bit off topic, but it actually plays a big role. So
it does.
For somebody who, let's say that they're 30 years old and they're going to be borrowing money to purchase a car, maybe 2 cars when they're married or they are married. They're going to be getting a mortgage on a house. Maybe they're going to have a rental property someday.
Yeah.
They have credit cards. What impact can a credit score have on somebody's investments or finances over time?
Yeah, and there's a number of ways to look at this. Like you and I, we've done a lot of things without borrowing money. In fact, we've never borrowed money. There's a lot of people that would say, "Hey, like that's crazy." Like when you borrow money, you amplify your returns. Imagine if
you're leveraging the dollar.
Imagine you have just a small amount you have to put in, and then that allows you to take on bigger opportunities, take on bigger, potentially investments that you wouldn't even have access to with a small amount of money that you do have. But one of the things that most people don't talk about as much is it significantly amplifies your risk as well. And just like you can have a larger rate of return, your ROI can be much larger in your initial investment, so can your losses. So I know that like credit is incredibly important. I think I talked about this on a previous podcast. At the age of I don't know, I can't remember, 16, I got a credit card. My mom co-signed. I was building my credit for what? I don't know. I didn't really have a plan in place. Didn't plan on buying anything. I just knew I needed to have good credit,
I did that with my dad. I think I was probably a little older. I was 18. But tell everyone what you did and how they can do that for their kids that are growing up.
Yeah. And I think that it's important to talk about how you're going to use that credit, different ways. Like for most people, you're not going to buy a house with the cash you've saved up. You're probably going to be applying for a mortgage. Same thing for a vehicle, right? Now, maybe with a vehicle, if it's your first car, maybe that's something you're using your cash to buy. But most of us are going out there and we're getting a loan. And basically, if you have a credit card, if you have different ways of building your credit, that can help you afford or have lower interest payments on that vehicle, on that mortgage, or whatever you're borrowing money for. And that includes investing into your business. We talked about that a little bit in some cases. Sometimes hiring employees or expanding or investing into things and borrowing money to do that. Your credit score will affect the interest rate that the lender is charging you to borrow those dollars.
So on a mortgage, if you're 1% higher, significant over your lifetime. On car loans, if you're 1 to 2% higher, significant over your lifetime.
Yeah.
On credit cards, it would impact it more, maybe 3 to 5% higher, significant over your lifetime.
Yeah.
And so if you can be thoughtful and intentional to have great credit, you will save tens of thousands. If invested different, will be a 6-figure plus difference over your lifetime.
Exactly. So like you if you don't have good credit, you may not even have access to borrowing. Like if your credit's not at least above 600, I believe, I don't think you're qualified for a mortgage. There's people who've experienced financial emergencies. Well, sometimes, maybe you've lost your job and you ended up experiencing bankruptcy or foreclosure or things like that.
Yeah.
That'll preclude you from getting a loan for another mortgage, in some cases for up to 10 years.
Right.
So whenever we talk about like just having good discipline when it comes to having a credit card, paying every payment on time, don't have more than 30% in revolving debt on your credit card. Actually, you shouldn't have any, but at least keeping your credit balance down to 30% of your total available limit. There's different things you can do to make sure that your credit goes up. And there's a number of really easy things you can do. And I think that most people, I recently read an Experian article, and it talked about how like 70% of Americans actually have their credit score is above 600. But there's a big difference between somebody who has a 600 score versus like an 850, which is the max, right?
Yeah.
That's going to save you quite a bit of interest over the life of that loan.
So revisiting 5 key things to do if you've got discretionary income and extra cash flow. Number 1 is invest in yourself, invest in skills, certificates, licenses, things that get you paid more for what you're great at. Number 2, invest in your business if you own a business. Number 3, invest in the stock market, 401ks, IRAs, traditional IRAs, Roths. Number 5, invest in real estate. Really significant. Good credit for number 6. Any other tips and tricks?
Tips and tricks. I don't know. Don't do what the government is doing with with your household budget.
Exactly right. If you've got more questions on what to do with extra cash and how to not just save money, but multiply your assets, feel free to reach out to us. All things financial. We're on every podcast platform. You can find us online at atfpodcast.com and Trey at ATF Wealth and Yelisey at atfwealth.com. Click, share, and join us.
Advisory services are offered through CG Advisory Services, LLC, a registered investment advisor, and through Guardian Wealth Strategies, LLC, a registered investment advisor. CG Advisory Services, LLC, and Guardian Wealth Strategies, LLC, are separate and unaffiliated entities. The topics discussed on this podcast are for educational purposes only and are not intended to be investment advice or recommendations. Listeners should consult with their own financial professionals before making any investment decisions.